out here, right? Like, look what the Dow Jones did. I mean, did anyone expect this? Well, honestly, kind of, right? Because I've been talking about the stock market coming back to test this moving average, right? I mean, literally, it only took 4 freaking weeks. And what's really interesting here is that the Dow Jones closed above the moving average, and there's literally like no wick on this weekly candle. I mean, that's incredibly bullish, right? But what did I say a few weeks back? Well, I guess 4 weeks back. What did I say about this? I said, how will we know if this is going to end up in a major reversal to the downside? Well, it has a lot to do with what other assets are doing at this time, right? So if we just look at the Dow Jones by itself, it looks incredibly bullish. I mean, it looks like maybe there's going to be some follow through above this moving average. That's for sure. But at the same time, you have to consider that on smaller time frames, this move could be running out of steam, could be exhausted, right? And if we look at the RSI, it's like, yeah, okay, could be coming up to a reversal. And then when we consider what is occurring this week in the news, the Fed meeting, right, on Tuesday, we're going to get some speech from Jerome Powell. Here's what I think how that's going to play out here, okay? I think he's literally just going to do what he always does. He's literally just going to say 75 basis point rate hike, and he's probably going to talk tough. Now, we've heard narratives emerging about how he might talk dovish, he might be talking about a pivot, something like this. We've heard a little bit of these narratives. But I actually think that's part of the rodeo, right? That's actually probably not even true. None of that stuff is true. I actually don't think he's going to say anything different. And I think the speech that he's going to give on Tuesday or maybe Wednesday, whatever it is going to be similar to the speech that occurred here at the Jackson Hole. I believe he's going to try to push the market down, just like he did back here in August. I believe that's what he's going to try to do. But what's interesting and what's emerging as part of this grand divergence picture that we're starting to see here is that the Fed, when they are talking tough, it is actually showing that they are fearful that they have lost control over what's going on here. And so when we see the Fed talking tough here, potentially on Tuesday, talking tough into this massive up move that's occurred over the past 4 weeks, we could expect that tough language to really just be their fear, right? They are now fearful that they have completely lost control of inflation. And the thing is they really kind of have lost control over inflation based on what they did in 2020 with the money printing. There's no way that they can ever get back to, 2% inflation over the next 5-10 years, really, at this point. And also, what have I said many, many times? We don't really have reason to believe that they want to get to those low inflation levels, right? We don't believe that there's a motivation for them to restore the purchasing power of the masses, right? There's no reason for us to believe that. That's not what history is showing us. So that means when we have the Fed speech this week, the way that I will be interpreting that speech is that this is now Jerome Powell fearful. He is now scared that he will not be able to make this market look the way that he wants it to look. And what does he want it to look like? He wants it to look like it's basically in a slow grind to the downside. That's what he wants, because that makes it look like they're starting to deal with inflation, right? But now, see, there's a bit of a conflict between the Fed and the Congress at this time. Now, this is actually very interesting, right? So this narrative about the Congress banning the ownership of stocks has been going on for a really long time. Look back to February 9th, 2022. There's this article, Congress moves to ban stock trading, blah, 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 right? Now, this is literally at the beginning of this year. Here we are basically at the end of this year. And look here, October 3rd, 2022, Congress about face on stock trading ban, right? Meaning they are not planning to ban themselves from owning stocks in the immediate future, which is really strange when you think about it, right? Because you have all of these political events coming up. You have a midterm elections coming up, right? Now, if Congress wanted to look good in the midterm elections, they would absolutely ban themselves from owning stocks. You see what I'm saying, right? Because Americans want them to, right? The whole narrative is like, get Congress out of the stock market. That's a total conflict of interest. And it certainly is. And they would look politically correct, you know what I mean? If they were to ban themselves from owning stocks coming into the midterm elections, that would be hugely beneficial for them. Why aren't they doing it? You see what I'm saying? Why haven't they done this? That is the big question. And I think you know my implication here, right? And I think the Dow Jones is sort of telling you why they haven't done this yet, right? And so the conflict between the Federal Reserve and Congress is that Congress is still in the stock market. The Federal Reserve is out of the stock market, right? The Federal Reserve, we haven't really talked about this on the channel, but Federal Reserve has actually got out of the stock market back here because the Federal Reserve is actually banned from owning stocks at this time. They already banned themselves, right? So they are out back here, and now Congress is still in. So now you have this infighting in Washington where Congress is like, yeah, dude, we're trying to sell the top of this thing, and Federal Reserve is trying to crash the market. Well, not crash it, but they're slowly trying to grind it to the downside. So you have this major conflict here, right? And so that partially explains why there's a little bit of fear in Jerome Powell's voice when he says, you know, we got to crush this labor market. We got to restore price stability, blah, blah, blah. What does that even mean, restore price stability at this point? Literally, what does he actually mean now? Is he saying he's going to bring the price of oil down, the price of gas down? Well, that's not really going according to plan at this point. All right, back to the idea of what are other assets doing, right? Well, let's take a look at the old cryptos, right? If you look at crypto right now, does crypto look like it's about to dump, right? Or does it look like it's about to potentially make a large move out of this range back into some retracement levels? Your guess is as good as mine. If I'm just looking at the chart, let's look at weekly, actually. If I'm just looking at the weekly chart here, see, we're about to put in the most bullish weekly candle we've seen since June, right? Potentially, that's how this thing's going to resolve. That's pretty good, right? So that could be setting us up for that move out of this range. So if crypto is potentially setting up to move out of this range and revisit some of these retracement levels back over here, that probably means that the Dow Jones isn't necessarily going to have a major reversal and a dump to the downside coming up here. I do think this coming week could potentially be a down week, but only to gather strength to move higher, right? Because if this is, say, potentially just all a wave one, this looks like a very impulsive wave one. We got to do the wave two here, right? And then how do we corroborate that with the DXY? Well, DXY looks like it could be revisiting some retracement levels this week too, right? The DXY could be coming up this week to fail as it basically retests the breakdown level. You know what I'm saying? So if we drill down on the DXY here, really interesting where these candles are closing here, right? So now you've broke below the intersection of the A and the B leg in this C heart wrencher correction. So we got to ask ourselves, what's the target for this C heart wrencher? How do we figure that out? Easy enough. Invert that Fibonacci, and we look for that 1618, and we see that the DXY is most likely heading down around this level before the ABC correction is complete. Now, before it heads down to that level, it could spend more time up here. That's for sure. And if it spends more time up here, that potentially sets up the Dow Jones and the other indices for a little bit of downside, potentially a bullish wave two. And that would align beautifully with the Fed speech, which will definitely at least push the markets down slightly, right? If he comes out and says 75 basis point rate hike, you know, we're trying to scare you, you know, we're going to destroy the labor market, get ready for the nightmare. It's like, that's what he's probably going to say, right? And that's why the rodeo is basically like you have all these like misleading articles coming out like, oh, the Fed's going to pivot. Oh, the Fed is starting to get dovish. I actually think that part of the reason those articles are coming out is actually just to scare people even more when Jerome Powell comes out and tries to say all of his, hawkish, scary language, right? Because now the market isn't scared of a 75 basis point rate hike anymore. And the thing is, if Jerome Powell actually were an autonomous being, he would be raising the interest rates a lot higher than 75 basis points. The reason he's only raising by 75 basis points is literally because Congress and the rest of Washington, the incumbents are like, dude, stop. Like, we don't want you to raise this anymore. Like, we're still in the stock market here. Like, don't you want to keep your job, or we're going to fire you if you don't do what we tell you, all this kind of stuff, right? So Jerome Powell is trying to look as scary as possible, even though he's not even saying things that are very scary. 75 basis point rate hike is not scary. The market shrugs that off like it's nothing. That's what we're seeing. So the whole theory that I have is the reason you're starting to hear some of these, the Wall Street Journal is talking about Jerome Powell potentially pivoting or starting to talk dovish is only because that's going to make him sound scarier when he doesn't pivot and doesn't sound dovish this coming week. You see what I'm saying? The market is not afraid of 75 basis point rate hikes. It's literally not. It might move slightly down in a wave 2 on Tuesday or Wednesday or whatever it is, but ultimately it makes a lot of sense that the market is actually in a 5-wave impulse, and this might have been the bottom. Like, oh my freaking God, like, holy shit, right? If that was the bottom, it makes a little bit of sense. But let's look at the old the VIX first before we get too excited about a potential bottom being in there. Because what have I said, right? The VIX has not spiked, right? The VIX has not shown us ultimate fearful capitulation. This is what an ultimate fearful capitulation move looks like. We have not seen that, right? So, but what we have seen is the VIX break below its moving average off of a double top. And then if you sort of zoom out, actually, if you look at the weekly chart, this is actually an interesting configuration here. If you look at the weekly chart, what does this freaking look like? This looks like a massive, massive double top with like an extra top. It's like a triple top, right? This looks like the VIX is struggling to break above here on the weekly freaking chart. And it closes a weekly candle below the moving average. So the thing we have to be open to is that the VIX does not have to spike in a fearful capitulation like it did back in March 2020. It does not have to do that to signal a bottom. In the same way, we have to consider it's still likely that it will spike to signal a bottom, but it does not have to. So, make of that what you will, but it's definitely possible that we have a significant bottom coming in here that literally could take the market to new highs off of this bottom because of how impulsive this looks. This looks like a strong wave 1 impulse. This freaking looks stronger than this one. You see what I'm saying? And it looks especially stronger on the larger time frames because you literally have the weekly candle closing above the moving average, whereas the last time we were up in these sort of frothy areas, you had the weekly candle closing bearish below the moving average. So that is interesting, right? And when we look at other assets at the same time, like I'm saying with Bitcoin, it's like Bitcoin looks like it might be ready to get out of this range. And I've said the evidence continues to pile up that Bitcoin isn't going to break down from here. It's probably going to break up, and it's only a matter of time until it does. And it's like been long enough here. It's been June, July, August, all of September, almost all of October. It's been in this range. And it's like it's gathering the strength it needs to make this move. And this move might be freaking powerful here. It might be. So very, very interesting rodeo psychopathy that's taking place here. This whole Fed they're trying to scare us with information that's not scary. The market's not scared of what they have to say at this point. If all he says is another 75 basis point rate hike, that's not going to be a significant tailwind to the market. It's not going to move the market down. The market's already proven that kind of rate hike is just completely insignificant. Plus, consider the fact that Congress at this very moment is holding deep on stocks. They're holding so deep on stocks that they aren't even playing we banned ourselves from owning stock card. They won't even play that card, even though it would help them massively in this midterm election. They're not even playing that card because they care more about the price of their stocks going higher than they do about the outcome of this midterm election. Literally, dude. You see what I'm saying? Like, wow, kid. It's like, whoa, dude. It's like getting pretty bullish out here, honestly, when you kind of look at the whole confluence of the macro environment here. And then you look at the technicals and you look at all these massive bullish divergences you have, right? Like I said last week, you got this massive bullish divergence on the SPY, classic bottoming bullish divergence pattern that we've seen back here. You know, we saw this 2015. We saw this in 2009 after this financial crisis occurred. We saw the same kind of bullish divergence at the end of the tech bubble popping. Look at this, right? The ultimate bottom here, October 2002. And then you see that RSI uptrending before the market starts its uptrend. I mean, literally, you have the makings of a technical bottom, that's for sure. I think the missing ingredient would be the VIX at this point. But, you know, like, history doesn't necessarily repeat itself. It rhymes. So the big misleading factor, like if you're a bear and you're short this market, the thing you're looking for here is the VIX to spike. That's what you want to see. But maybe as part of the rodeo psychopathy, it's just like, oh, well, that part of the picture isn't necessarily going to come like it has in previous cycles, right? You're not necessarily going to see the VIX spike like you have before. Maybe. That's obviously a speculation, because I have to keep in the back of my mind here that, you know, the reason I can't just go all in right now is because we don't have like 100% clear green lights. You know, we really don't. There's key elements missing to bottoms, at least when we consider previous bottoms. In the VIX, spiking in a fearful capitulation is one of those. So that's one thing I keep in the back of my mind. But when I look at the greater crypto market, I look at a setup that's ready to turn bullish here, you know? And I look at the DXY and I'm like thinking this thing's got more downside ahead. You know, how much farther can the stock market move in this downswing on the DXY? Well, probably significant. It can move significantly, because how much did it move from October 21st to October 27th? A lot, you know, literally, like it had massive bullish green candles closing now above the moving average. So it's like, whoa, you know. So this is going to be a really, really pivotal week, because it's going to solidify a lot of the divergence we've been talking about, right? It's going to solidify the idea that the market no longer cares about 75 basis point rate hikes. That's huge divergence, right? That's the Federal Reserve telling us that we should be scared, and then the stock market literally not being scared. And who are the people that are driving the stock market? It's the people with the most money. You know, it's the institutional investors, right? They can see right through the Fed. The Fed cannot scare them. So the Fed is basically hoping that they can capitalize on the Halloween fear and crash the market. But literally, like, even as I'm saying that sentence, I'm like, they can't do that. They've played all of their cards. They don't have any more tricks up their sleeve, right? If Jerome Powell can't raise above 75 basis points, then he's got nothing. He's got nothing. If he wants to crash the market, he would come out and be like, yeah, we're literally raising by 200 basis points. You know what I mean? Like, that's what you do. But he can't do it. He literally can't do it because he wants to keep his job. And Congress is telling him, yeah, sorry, we're not going to let you, you know, hike any more than 75 basis points. And Congress right now is sitting pretty. They're like, perfect. The market doesn't care about 75 basis point rate hikes. Awesome. We're set up to dump our stocks at the top, and Jerome Powell can't really do anything about it. He's just a puppet figurehead, and what he says is basically irrelevant. Like, quite literally, unless he says something totally unexpected, but he's not. They try to set up a situation where he says something unexpected, like now we're supposed to be surprised when he says a 75 basis point rate hike because the Wall Street Journal said, oh, maybe he's not going to do a 75 basis point rate hike. That is so, like, childish, right? That is just like such a failed attempt at trying to get the market to do what they wanted to do. At this point, everything that Jerome Powell says is literally a product of his own fear, right? He does not like to see this. This makes him look bad, right? This makes him look like he can't do his job. It makes him look like he doesn't have control over the market. The fact is, he probably doesn't, because there's too much liquidity in the system. Like, it's literally